Alrighty, so this will be a quick recap of the Euro Kiwi short position that I took the other day. So, kicking things off with the higher time frames, monthly, there's really not a whole lot to say. Weekly has had a nice extension up into this huge region of supply here. So, naturally expecting some kind of sensitivity around this region. We could layer on top as well that we hit the 1 spot 85 handle as well, which is quite the key psychological round number. Then stepping down on the daily time frame, we can see that extension a lot clearer here. We've got the wave 1 breakout. We're now expecting price to pull back wave 2, and then maybe we can look for a further upside continuation or further downside from here. However, that's getting a little bit further than the scope of the position. So as a day trade, what I was looking for is just to short this daily pullback from the highs down into the lows down here at that daily 50 EMA. So there was quite the decent risk to reward on offer for that longer term target. Stepping down to the 4 hourly time frame, we've got the nice clean break and retest of the 4 hour 50 EMA. So wave 1 breakout, wave 2 pullback, looking for the wave 3 run. Now, usually this would be a very nice initial entry here called a complete breakout. We have the wave 1, wave 2, we execute on the rejection, and we can take that down to wave 3 at the daily 50 EMA. There was no setups that met the requirements of the plan at that point in time. So my next and more advanced position was the advanced continuation breakout, which occurs after we get that 4 hour 50 EMA rejection after that initial complete breakout. We're taking that next intraday lower high in line with the position and the bias of heading down to that daily 50 EMA. So if we step down to the 1 hour time frame, we can see we've got exactly that. We had the higher time frame or the 4 hourly wave 1, wave 2, and now on the intraday here on the hourly, we have the wave 1, wave 2, looking for a wave 3 run to the recent lows as a first preliminary target. So what I really liked about this position was that we did get a nice breakout through the hourly 50 EMA, through that 4 hour 50 EMA. We got a swift retracement up, and then we got the bearish engulfing. So that bearish engulfing there was the cause for execution on the position. We had a nice tight 35 pip stop above 0.618 Fibonacci retracement as per my trade plan. I guess in hindsight, it is looking pretty tight. I could probably have gone up to 0.75, but in this situation, 0.618 was definitely all right. We had a nice head and shoulders as well. We had left shoulder, head, right shoulder. So an additional confluence here for that lower high printing for then price to roll over to the downside. Now, a negative confluence factor to the position is that it's Aussie Kiwi and shit's looking pretty sideways as well. This is a very corrective and very slow moving range bound asset. Just with that Kiwi cross, I find that the Kiwi crosses are generally pretty sideways, but in this case, it was not enough of a reason to not take the position. I still believe that there was an edge present. The setup was there. We were trading through the EMAs already, so the path of least resistance, in my opinion, was to the downside with that expectation on the daily for price to pull back to lower prices. We were back on side of the 4 hour 50 EMA and on the hourly 50 EMA. We've got the expectation that the market's made a lower high after rejecting that 4 hour 50 EMA, and that it's going to head lower down into the daily 50 EMA. Unfortunately, in this case, that didn't happen. Price just chopped around sideways for a good amount of time. There was no real way to control the outcome of the position. It just kind of is what it is. Now, if I quickly jump into the management of the position, and I'll sync up this with the lower time frames, we've got the execution. Now, not an error, but something to note is that we had the 1 hour 50 EMA rejection, which is fantastic. That's the strongest one we can look for. But sometimes, a lot of the time, I like to execute with the 5-minute 50 EMA breakout as well as that final filter. It's not a be all end all if I don't have the 5-minute, but I do have the 1 hour. I'll lean towards the 1 hour a lot more. but that 5-minute 50 EMA had not broken out just yet, so there was every potential that that 5-minute 50 EMA could have been held as support and then price rocket against me. But I took the risk, I took the chance, because I liked the hourly 50 EMA rejection, and that's part of the plan, that takes precedence and power over the 5-minute 50 EMA. So price just chopped around for a while, and then once we made this new lower low down here and we closed that hourly quite strong, that was my cause and signal for that phase 1 risk reduction here. So clipping the recent highs, that was phase 1. And the reason I do that is because at this point in time, we're trading through that 1 hour 50 EMA. It would have to come quite a long way up. It's got to trade through a lot of areas of resistance that the path of least resistance is to the downside in the favor of the position. And if price comes all the way back up there, chances are it's heading to the stop. So I'm just bringing that risk off the table as much as I can without choking the position. In hindsight, could I have clipped my stops down to here? Yes, but I did think that that would have been far too aggressive. I trail my stops behind the 1 hour 50 EMA on these positions as a balanced management, and there was no reason why price couldn't just retrace back up, reject, and then continue lower. So it was too premature to clip these highs here. However, definitely valid for a much more aggressive management style. So ultimately, market then pulled back and took me out. It was not quite a full loss. It was about negative 0.7, I think. I haven't done the exact maths on it yet, but that is the position. That was the entry, the reason for entry, how I was looking to manage it, and the target at the recent low as first target for 2.3. So it had a significant amount of risk to reward to justify a bit more of an aggressive position with such a minimal amount of room for price to move. And then we could also extend that down further into that daily 50 EMA for a really high risk to reward trade. But just one that didn't play out. I do like the position. I would take it again. Everything was there. It just unfortunately did not go in my favor. So with that being said, that boxes off the trade recap, and I shall see you in the next one.